I'm with How To Taxes, here to help you prepare your Form 1040 SR when you itemize your deductions. The scenario of this video is that you are single and you have W-2 income and interest income from a savings account. To use Form 1040 SR, you must be born before January 2nd, 1959. It mirrors Form 1040 and you use the instructions for Form 1040. At the top of the form, put your first name and middle initial, your last name, your social security number, and your address. Under the filing status section, check the box that you are single. Answer the question under the digital assets section, and under the standard deductions section, check the box that you were born before January 2nd, 1959. On line 1, put your wages. You can find this information in box 1 of your Form W-2. In our example, it is $69,353. Carry that down to line 1Z. In our example, you received interest income from a savings account. This was reported to you on Form 1099 INT. In our example, your interest income is $147. Place that amount on line 2B. On line 9, add up all your income. In this example, it is $69,500. Carry that down to line 11 as we do not have any adjustments on Schedule 1, line 26. On line 12, we will put the larger of your standard deduction or your itemized deductions from Schedule A. You can find your standard deduction on the standard deduction chart on page 4 of the Form 1040 SR. Since your filing status is single and you have one box checked in the age blindness section of the standard deduction on page 1, your standard deduction will be $15,700. Next, we will look at Schedule A to take the larger of the two. The first section of Schedule A is medical and dental expenses. You have to look at your adjusted gross income from line 11 of Form 1040 and multiply that by 7.5%, as your expenses need to exceed this amount. In our example, you have adjusted gross income of $69,500. If you multiply that by 7.5%, it comes to $5,212. If you had medical and dental expenses that exceeded this amount, your deduction would be the difference. In our example, you do not have expenses that exceed this amount, so you will not get any deduction for your medical and dental. The next section is the taxes that you have paid. On line 5A, you will put the larger of your state and local income taxes or your general sales taxes. First, we will look at calculating your general sales tax deduction. You can find the worksheet on page A5 of the Schedule A instructions. First, we will enter your state's general sales taxes from the state sales tax table that you can find in the instructions for Schedule A. In our example, you lived in the state of Indiana. You can find the sales tax table on page A14 for the state of Indiana. Because your income was at least $60,000 but less than $70,000 and you had a family size of 1, the amount that you'd enter on line 1 is $974. As per the instructions, since you lived in the state of Indiana for the full year, you are to skip lines 2 through 5 and enter 0 on line 6 and go to line 7. On line 7, you're going to enter any additional state and local general sales taxes on specified items. In our example, we don't have any, so this will be left blank. These are for some of the larger items that you might purchase, like automobiles. On line 8, you're going to add lines 1, 6, and 7 together. In our example, that would be $974. Next, we will look at your state and local taxes paid during the year. You can find the amount on your Form W-2. In our example, you just had state taxes that you paid in box 17 of $1,300. You would also look at line 19 if you had any local income taxes paid. In addition to the $1,300 of withholding, you also paid an amount with the 2022 state return that you filed of $200. This was paid in the 2023 tax year, So you would add this to the $1,300 to come up with $1,500 of a state income tax deduction. If you paid state estimated tax payments during 2023, you would add these to the total as well. On line 5A, you will enter your state and local income tax deduction, which is $1,500, as that is larger than your general sales tax deduction of $974. Next, we will put your property taxes paid on 5B and 5C. On 5B, we will put your real estate taxes. The difference between real estate taxes and personal property taxes is that real estate taxes are paid on something situated on land, whereas personal property taxes are paid on something that is movable, like an automobile. In order for your real estate taxes to be deductible, they have to be on non-business property. In our example, you paid $3,870 on your primary residence. You will place this amount on line 5B. In addition to your real estate taxes that you paid, you also paid $130 to register your car for the year that was based on its value. Place the amount on line 5C. If any of that amount was based on the car's weight, it cannot be deducted. On line 5D, add lines 5A through 5C together to arrive at $5,500. The tax deduction is limited to $10,000 on Schedule A, so on line 5E, you will enter the smaller of $10,000 or line 5D. In our example, it is $5,500. On line 7, we'll add lines 5E and line 6 together to arrive at $5,500. Line 6 was left blank in our example, as this is for income taxes that you paid to a foreign country and GST, which is generation skipping tax. The next section of Schedule A is interest that you paid. In our example, you paid home mortgage interest of $10,000 that was reported to you on a Form 1098. Place that amount on line 8A. If you had interest or points that you paid that were not reported to you on Form 1098, those would go on lines 8B and 8C. Carry the $10,000 down to line 8E and down to line 10, as you don't have any investment interest in our example. Investment interest is interest that you paid on money that you borrowed that can be allocable to property held for investment. The next section is gifts to charity. In our example, you gave $6,000 by check to charitable organizations. Since this amount is not more than 30% of your adjusted gross income, it is all fully deductible on line 11. On line 12, we will leave that blank as you did not give any gifts other than cash or check. And on line 13, you did not have a carryover from a prior year. If the amount on line 11 was limited, then you could carry it over to the next year. Generally speaking, you have 5 years to use that up. On line 14, add lines 11 through 13 together. In our example, we will leave line 15 and 16 blank, as we do not have a casualty and theft loss, and we don't have any other itemized deductions. Probably the most common other itemized deduction is gambling losses, but you can only include the amount to the extent of the winnings that you reported on Schedule 1. So your losses reported cannot exceed the amount of the winnings reported. On line 17, we'll add up lines 4 through 16 together to arrive at $21,500. We will compare this amount to your standard deduction, which would be $15,700. Since your itemized deductions are greater, we will put this amount on line 12 of your Form 1040 SR. Carry the amount on line 12 down to line 14, as you do not have a qualified business income deduction. Subtract line 14 from line 11 to arrive at $48,000 for your taxable income on line 15. Next, we'll calculate your tax using the tax tables that begin on page 65 of the Form 1040 instructions. Since your taxable income is at least $48,000 but less than $48,050 and you're single, your tax will be $5,873. Place an amount on line 16 and carry it down to line 18, 22, and 24, as you don't have any other taxes or credits. On line 25A, put your federal income tax withholding that you can find in box 2 of your Form W-2 In our example, it is $6,000. Carry that down to line 25D and down to line 33 as you don't have any other payments. In our example, you have an overpayment of $127. Place the amount on line 34. If you want it refunded to you and not applied to your next year's tax, put that amount on line 35A. If you want it directly deposited into your bank account, complete lines 35B through D. If you don't want it directly deposited into your bank account, cross off lines 35B and D and the IRS will send you a check. Note that there's a box to the left of line 35A. You would only check this box if you want your refund deposited into more than one bank account. Remember to sign, date, and put your occupation at the bottom of the form. Thank you for watching. I am from How To Taxes. Subscribe for future tax videos.